We had market commentary describe Friday's session as uninspiring. We had light volumes being traded and taking that market south. What's your take on the markets right now?
Good morning, Alicia. Well, the market has been depressed from April this year. We've been having a kind of lull, but this is expected because we have a series of things that are affecting the market, the most notable being the inflation rate, which has put less money in the hands of people who may otherwise invest in the stock market. We've also had concerns of political risk as we near the 2012 elections next year. So for the most part, I guess we'll see a depressed market between now and that time. Be that as it may, I still think we still have a lot of activity left. There's a number of corporate actions underway. We have some companies planning to list, and we also have companies planning to have rights issues. And I think this will boost activity in the short term.
Of course, the factors that you outlined that are affecting sentiment in a negative way have affected local investor sentiment more than anything else. And what was most notable on Friday was the absence of foreign investor activity in the market as well. What did you attribute that low activity from the foreign sector to?
Well, there's nothing particular that may tell us why foreigners backed out on Friday. But maybe giving a guess, I would have to say they had taken positions earlier. If we look at some of the stocks traded, the blue chips, the ones which foreigners usually trade in most, they traded a bit higher than they were earlier last week and the week before. Looking at, for example, Uchumi, it gained 8.8% on Friday, gaining another 8.8 the day before. So looking at it at 12.5, it could have been expensive, and maybe foreigners and other people may have sat back. Other than that, we could maybe say that the ongoing wrangles in the government about appointment of key roles could have affected the perception of how we are conducting ourselves here locally.
Overall, though, Robert, I mean, some are saying that the stock market is actually very fairly priced on a price-earnings basis and looks the safest haven at a time where we've got overarching shilling and bond weakness. So do you share that kind of sentiment?
It may be a bit premature to say that, because I think we still have quite a number of months ahead of us. We still have a general election. There's the simmering tension about what may happen at that time. So I still think the market can be more discounted if you're looking at a price to earnings basis than it is right now. We could see a decline as we move further down to the close of the year.
Let's drill down into some of the counters that have caught attention. Safaricom traded third at the bourse on Friday, closed unchanged at 3 shillings 95, and we had President Kibaki calling a halt on interconnection price wars last week. It seems to have put somewhat of a floor under that price. Where to from here on out for Safaricom in your books?
That move was really, I think it was a good move. It kind of creates stability in the industry. It's better news for Safaricom than any other player. But if I was to look at Safaricom in particular, they have their AGM in September. That's a bit far. They also have their books closure for dividends in the same month. I think there's still a lot of time left for anyone wishing to trade in the stock. And I see it trading anything between 3 shillings and 50 to 4 shillings between now and that time. I don't see much change.
Of course, everyone waiting for that share price to make some kind of sustainable recovery beyond that 4 shilling mark. While we had government rhetoric influencing Safaricom in a positive way when it comes to movement on that share price, government rhetoric that affected a share price in a negative way was that budget announcement on Wednesday. Looking at the influence it's had on East African breweries, it continues to lose favor, of course, as the cigarette and alcohol tax has had a negative effect. Is this just a knee-jerk reaction we're looking at when it comes to a player like East African breweries? Because we know that there's hardly any surprise every year when it comes to sin taxes being raised.
Yes, the so-called sin taxes are meant to kind of hoodwink the public that the government really is doing something to safeguard the health interests of the people. But at the end of the day, I don't see this affecting the blue chip stocks. like British American Tobacco, which is a monopoly in itself. We have East African breweries, very stable companies. They have been around for a while. They have been going through this year in, year out. Last week, we must also remember that they acquired part of KBL from Sab Miller. So I think these things may not really affect much looking at the company in the long term.
What's interesting is we saw some positive move on Access Kenya. It turned 1.33% higher, closing at 7 shillings 95 on Friday. Access Kenya now sitting close enough to 20% above its all-time intraday low of 6 shillings 65. What's your view on Access at this stage of the game? Because we had many warning lights being sounded when it came to the stock, simply because of the kind of competition it has been receiving on the data front from a player like Safaricom.
Yes, and they're not out of the woods yet. They're still trying to bring out more tricks out of the hat. They're trying to be more innovative. They're coming up with new products. They completed installation of a metro fiber cable, which I think they plan to lease out. They have also moved into software development of some sort and offering other services. The future is still not that bad for it. I think it can recover. Looking at the stocks on the NSC, they are very cheaply priced at a price earnings ratio. So I think anyone would want to be buying in now as they anticipate some form of recovery maybe in the next few months.